Hello and welcome to WION World is One. I'm Kanishka Sarkar and today we'll talk about how you can plan your finances for the financial year 2027. Now, April 1st, 2026 marks a major shift in how Indians earn, spend and invest. From simpler tax filing with pre-filled returns to stricter cash withdrawal rules and a strong push towards digital payments, the new financial year brings big changes for the common man. Add to that higher trading costs, tighter crypto tracking and rising everyday expenses. Planning your finances just got more important than ever. To break this down, we are today joined by Mitali Nikore, economist and founder of Nikore Associates. Let's understand from her how salaried individuals should plan for FY27 and what all to keep in mind. Hi Mitali, thank you for joining us today. Firstly, tell us what are the top 3 financial changes that salaried individuals must plan for in FY27?
So, I want to speak not only as from a financial planning perspective, but also from a larger macroeconomic perspective. I think it's very critical that we talk about the macro economy before we start talking about, micro level changes. At the end of the day, what is happening in the world today, right? We're facing a war in the Middle East, we're facing a war in West Asia. Because of this, a lot of businesses are actually coming up with a scenario where they actually need to be fungible with their employees. So I think the first thing that people need to plan for, all salaried individuals, is a lot more uncertainty in the coming year.
Right.
I'm not saying that there will be job losses, but you just have to be very, very aware of the business ups and downs and plan for that in your finances. The second aspect is about the fact that we have to really think about how the income tax returns have changed. The fact is that the filing has been made simpler. There's going to be pre-filled taxation. There's also sort of the assessment rules but have not changed, and I think that's something that we should keep in mind. Income till 12 lakhs is exempt from taxes. A lot of the exemptions for ATC, etc., can also be availed for. So, salaried individuals should take into account the fact that you are going to be actually facing an easier regime. Your life is now going to get a little simpler, but also it means that you can actually go for a lot of instruments that will give you that tax advantage.
Correct.
So,
right. Right. Now, speaking of, the tax advantage that you were highlighting, new income tax slabs, they are also going to be applicable under the revised regime from April 1st, that is today. Now, how do you think one should plan their investments basis the new slabs? And also, if one does decide to stick to the old regime, how should they go about it then?
So personally, I feel that the old regime has always been very confusing. I mean, I personally, when I go for my taxes also, I'm going for the new regime simply because of the fact that, you can simply take a simple exemption till 12 lakhs, not worry about anything till 12 lakhs. You sort of go from there, it's 12 lakhs. And then after that, you can say, okay, now I'm, deciding my own investments based on my requirements, based on the return portfolio that I want. And I can actually maximize, the returns also in terms of the portfolio. So I think that there's a lot of efficiency that one can gain from going for the new tax regime. Of course, the old tax regime also, if one is going for it, that option is there, it's available with us. But of course, one has to look at then the kind of instruments that will be prevailing in the market that you may have previously invested in. I don't think that any of the new insurance companies, be it health insurance, be it life insurance, or even travel insurance, would be coming in and actually giving you exemptions under the new regime.
Right.
And that also allows the insurance companies, especially health insurance, to pack in a lot more features for your health insurance as opposed to just the exemptions that you would be getting from the insurance. That would actually give you a lot of benefits.
Right. And Mitali, now you were talking about the simpler tax regime, right? That is the new regime. Now with simpler tax forms, but there's also stricter tracking, right? So how should people approach tax planning differently this year?
I think one thing that everybody really needs to do is maintain their own own Excel sheet. I know it sounds like a very practical tip. It sounds like a very practical, point. But at the end of the day, whatever you are spending, just maintain your own, sort of Excel sheet to say, this is what I'm spending on, this is what my incomes are. Because at the end of the day, I do feel that even companies may not be able to fully track, what are the changes point to point for each individual. So it's very important that you maintain your own, Excel sheet, because in the first 2 to 3 years, companies, CAs, the entire system will also take some time to actually adapt to these changes and may actually miss out on things. So I would recommend to everybody, maintain your own Excel sheets, maintain your own salary accounts, maintain your own expense trackers. And before, what was happening is there was a lot of pressure on individuals, even salaried individuals, to show each and every expense. Okay. You're making a business expense, you're making a corporate expense, you have to show each and every number. Now you don't have to worry about that in the new regime. Till 12 lakhs, you simply don't have to worry about small, everyday expenses. You just have to worry about the fact that till 12 lakhs, you are getting that exemption. That's a blanket exemption. So you really don't have to worry till 12 lakhs. I would say that's a very, very, it just eases things up. But yes, if you are running a business, then it's a very different scenario. I'm an MSME, and for me, it's a very different scenario because I have to track everything that my employees are spending. I have to track my employee salaries. I have to track my, business expenses. Right. So for MSMEs, definitely, it's a very different situation from salaried employees.
Right. A very interesting point you have made about, maintaining your own Excel sheet. Very practical and, well-to-do tip. Now, let's also talk about digital payments. Digital payments clearly are rising, and now there are stricter KYC norms. Any habits that you would like to suggest that the common man should change immediately?
So I think, what happens with digital payments is we go in. Let's say I'm sure it's a scenario that happens to any of us every day. We're taking a cab, we're ordering a meal from somewhere. We want to use our wallet, for that, or we want to pay digitally on UPI for that. Now, what happens very often is we might forget those expenses. We might think that, I'm not entirely sure, where did I spend that? Where did that money go? It is very critical that we all maintain a history. There's a history that you can access from most of the apps in that wallet. I do think that it's worth it in that monthly Excel sheet to download that history and to actually do like a recon of your expenses just to be sure about, okay, where all have I spent? Digital payments also, I think one can actually preload one's wallet a little bit, because that obviously is easy, and that's not going to change in the new norms. But yes, it is now going to become easier to do bigger digital payment transactions. So earlier, let's say I was scanning a QR code, I could only pay 2,000. Now I can pay up to 5,000 with that. Yeah. So it's now actually easier to make bigger digital payments, and that obviously is a good thing because it helps us keep a record of our transactions, and we can do, a download of our history, and again, we know where those expenses are going. So I think from a personal finance perspective, any day, pick a digital payment over a cash payment.
Correct. Understood. And now let's also talk about trading. Of course, cost of trading is going to increase, right, with the new taxes coming in, and also daily expenses. How do you think individuals should rebalance savings and investment? What is your thought over there?
So I think that personally, I don't find that as an economist to be a very big barrier to trading. It's only a small increase. We are not actually going to be seeing a big increase. It's not like a big transactions tax is coming in or something like that. It's Correct. Just a small cess. It's a small levy. And also that does not apply for transactions below a certain amount. I think if I'm not wrong, 10,000 rupees for, is the exemption limit for that transaction. So in any case, everyday transactions are not impacted by that. It's only larger transactions which would get impacted by that. And easily, that can be taken into account when you are going, for retail transactions or even for business to business transactions. It is definitely recommended to use, say, for example, banking, net banking, and direct payment methods, as opposed to doing large business transactions via a credit card or via UPI mode, as opposed to using net banking, because in bank-to-bank transfers you would not be facing any charges. So I think this is just meant to keep everything much more in the formal payment system. I think where it starts to have an impact is really on the MSME sector, because it's in the MSME sector that that's where you actually have a lot of informal payments that are happening. You see that there are larger transactions that need to be undertaken either with cash or with UPI, and that's where we are recommending to MSMEs to actually come out with wallet accounts and do the KYCs with wallet companies. Because what happens is that if you have, say, a KYC with a wallet company, you can also get a little bit of a credit limit from that wallet company, and you can actually have your transactions more proceed in a very seamless manner. You then don't even need to have a very large bank account.
Right. Got it. And Mitali, lastly, before we let you go, against the backdrop of this Iran war, and we are seeing rising oil prices, how do you think households should prepare for inflation and any kind of uncertainty in that respect?
So I think first let's break down what's happening with the Iran war and the economy, right? Just for 2 minutes. Like, firstly, before we, start worrying about household finances. So firstly, what we are seeing is we expect the de-escalation to start happening in about 2 to 3 weeks. That's I think that should happen. I am hopeful that should happen. So let's assume a good scenario, optimistic scenario, that within a month's time, we start to see a lot of prices stabilize. Now, what the government has done is that they have actually cut down the excise duty. Now, when they have cut down the excise duty, essentially it means that they are deterring the oil companies from passing on any of the rising oil prices on the global market to the consumer. So we haven't actually seen, petrol prices go up in an en masse manner. We haven't actually seen diesel prices go up in an en masse manner. And I have done the calculations at Nikore Associates. We've done these calculations. And we believe that for 3 months' time, the government can easily afford to actually keep on sheltering the consumers. It will take the fiscal deficit up from about 4.3% of GDP to about 4.5% of GDP. But even then, till 3 months, this sheltering of the consumers can continue. Now, if this sheltering does continue and we don't see an oil price increase considerably, then I don't think that we should be seeing generalized inflation in that manner, because again, all of last year, our inflation rate has stood at about 2.5%. Now, even with the impact of the Iran war, I believe that we have about a 3 to 4 month window before we cross a 5% mark on inflation.
Right.
Because we still haven't seen the oil prices increase in the retail markets. So I think that right now, for the next 3 months, we should not be seeing any, generalized or massive impacts. Yes, as we start to see those prices increasing, that's when we, can think about worrying about it, or think about, how people can think about saving more or, consuming less. But at this point in time, I think our economy is very well primed to withstand this crisis, and the government is doing, all that it's in its power to secure oil supplies from a diversified range of countries, to invest more in renewable energy and bring down the overall cost of the energy basket. So I think at this point in time, I would not have any fears of generalized inflation coming in for the next 3 months at least.
All right, so the next 3 months look good as far as the inflation side is concerned due to the war. All right, thanks, Mitali, for joining us today and sharing that perspective with us. On that note, we'll let you go.
Thank you.
From stricter compliance to rising costs and a digital-first push, financial planning can no longer be passive. The key will be to stay informed, stay compliant, and stay flexible in an uncertain global environment. And to our viewers, plan smart, spend wisely, and stay ahead of the curve.